You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for Interview Tuesday here on the Options Insider Radio Network, the portion of our week where we welcome on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains. For the benefit of you, the listener, as the man said, my name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting, at least we hope so, OptionsInsider.com, reminding you, if you like what you hear, this show, anything else we do here throughout the week, nearly a dozen programs coming at you these days on the network. Keep rating and reviewing it wherever you do find this content, and it is available pretty much everywhere. I saw it up there on Audible the other day. You can get your favorite works of literature, then check out our network content, or of course your Apple Podcast, your Google Podcast, your Spotify, your Podbeans, and so on and so forth. Wherever you're getting this content, do keep rating and reviewing. We have seen a huge influx of new participants in the options market, and as a result, a legion of new listeners to the network. They need a place to turn to learn about these markets and to talk about them. So we're happy to provide that for them. Keep rating, reviewing. Really does help those folks discover the content. Of course, keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old program. Today, I am joined by Garrett Desimone. He is the head of quantitative research over there at OptionMetrics. Garrett, welcome to the Options Insider Radio program.
Hey, Mark. Thanks for having me. Excited to be here.
As Garrett, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the options and derivative space, as well as what it is you do day to day over there at OptionMetrics.
Absolutely. So a little bit about OptionMetrics first. We're an options data and database and analytics provider, and our main clients are institutional, but we also have a strong academic following. And our clients come from major hedge funds, sell-side institutions, and they use our options data to backtest strategy, build out their risk analytics. And our database covers US, Asia, Europe, and major global indices. And on top of our, regular pricing feed, we also build in Greeks and analytics. And my role at OptionMetrics is I'm the head of research. So I'm responsible for building out our new analytical products and implementing our models and expanding our base of users.
And give us a little bit of your background in the space. What were you doing before you landed at OptionMetrics, sir?
I was a pure academic. So I come from the University of Delaware. I did my PhD in financial economics there. And you might have guessed it was in options using OptionMetrics data. So it was a very good fit for us. And I've been working here over the last 4 years. And a lot of my research is focused on studying options behavior, particularly related to macroeconomic news, and also working with options to sort of develop different levels of factors and ways to view options analytics differently, especially when predicting stock returns, their underlying stocks.
So you were a customer before you were helping to design the product. I guess that means you like the product there, Garrett.
Oh, love the product, and I'm hyping it up, but it's the best one out there for data. So we provide the cleanest options pricing data, which is definitely not an easy task because it's very dense. And there's a lot of Q&A, and we have great teams that make sure our data is clean. And it's a great product.
Well, it's been a while since we've checked in with OptionMetrics. It's been close to 4 yeyears. It doesn't think it's been that long. We had David Hayden, your CEO, back there in 2017. So obviously a lot has happened since 2017. 2017, that was a different lifetime these days. That was back in the days of, wow, vol is so anemic, and VIX was lingering in the single digits for better part of a year, and it was a very different environment. Of course, fast forward to now, and of course, we're coming off the heels of 2020. Everyone thought 2021 might be a quiet year, and so far it has failed to deliver in that sense. It has been, if anything, it has exceeded 2020 in many degrees. So a lot has happened, Garrett, since the last time we checked in with OptionMetrics. So catch us up. What has this past year been like? Obviously, a lot of volatility on the screen. We had many unprecedented events. Of course, from a vol perspective, we had vol exploding. We had the markets going fully electronic for the first time. We had volume exploding to beyond record levels, and that explosion continuing into 2021. We've had unprecedented developments like the GameStop and meme stop madness, and all sorts of fun has happened since the last time you guys were on. So catch us up, and particularly this past year and change over there, Garrett. What has that been like, and what's been going on over there at OptionMetrics as the options world was pretty much turned on its head?
Sure. So we have a saying at our company. It's our logo. We love volatility, and so it's been a good year in terms of awareness for OptionMetrics, because there, especially from the retail side, there's been this heightened interest in understanding options and getting from some first time investors dipping into the market. What we've seen from our clients, our institutional ones, is that they're very interested in these retail flows. So our research has been focused on how do we provide information regarding where retail traders are sort of flocking to, and that originates from the whole GameStop saga.
Well, that's definitely the case. Yes, we have seen a lot more interest in that segment of the market. You could say the big story of 2020, and there were many in 2020, but from an options perspective, one of the big stories really was the rise of retail and just the explosion in mass. I mentioned there at the top of the show, just the influx of new, very basic retail listeners that we've had to the network is a sign of this, how many new people are discovering the world of options over the course of the past year. Let's get into that a little bit, because obviously these are somewhat unprecedented times. We've had many guests coming onto this program and on the network over the past few months, certainly since the dawn of the new year and the rise of this whole meme stock craze, saying, things have been turned on their head. Things that we were taught when we walked on the floor really couldn't happen. Stocks trading at 1,000% implied volatility and all these other mad scenarios that we were told were pretty much non-existent have been happening with an alarming degree of regularity. And if you're out there modeling volatility or trying to, let's say, stress test different names, all of a sudden that's a completely different environment, because you have to stress test things you never thought of before that are usually completely uncorrelated, like an AMC and a GameStop. And then let's throw an SLV in there and pick your poison on any given day. It's become a very topsy-turvy market. And in particular, for you guys out there who are playing on the volatility side, I think a pretty fascinating one. So you mentioned the institutional players are a lot more fascinated, more interested in the retail flow and their impact on the volatility and on the skews out there. So what are you guys doing to help the institutions track that and model that and try to quantify that there, Garrett?
Absolutely. And one of the new products we've actually rolled out this year is called Signed Volume. And the interest that's been generated from, understanding these retail flows kind of sparked the idea for it. And what Signed Volume does a little bit differently is we actually track price quotes intraday and identify whether each volume order was hit closer to the bid or the X. Is because buy orders mean something very different compared to sell orders on options. And a very typical indicator would be the put call ratio, for example. The problem with the put call ratio is it's very it doesn't differentiate whether traders are doing primarily buying or selling. So with our new feed in Signed Volume, we can identify whether the percentage of volume is actually buying or selling. And as it turns out, when call buying is very high, the stock performs pretty well over the next week. When the put buying is very high, the stock performs rather poorly. So there is some information that's built into these more advanced statistics regarding the directional order flow.
It's interesting. You mentioned the put-call ratio, and that's an old metric, I think, to put it charitably. It's one a lot of people like to bandy about. It's one I've never been a big fan of for a lot of reasons. There's a lot of data that can get in there that could really obscure what the heck is going on. So it's never been one that we've really relied on too much here on the network. And I've always cautioned a lot of our listeners against it as well for a lot of reasons. But it sounds like, Garrett, you guys over there, OptionMetrics, are trying to come up with a put-call ratio 2.0. Is that fair to say?
Yeah, so we like to coin it the put-call demand ratio because we're looking at explicit demand orders for options.
All right, so break that down for us a little bit. What is this put-call demand ratio? How do you calculate it? And why do you think it's superior to your old school traditional put-call ratio?
Sure. So it's very simple. It's just the out-of-the-money put buys divided by those out-of-the-money put buys plus the out-of-the-money call buying. And this is calculated from the intraday prices I mentioned earlier, and then aggregated at the end of the day. So what we get for every single security in our US database is this demand ratio. And it effectively tells us whether the amount of put buying was higher relative to the day before, or if you look at it to compare between two stocks, what the relative amount of put buying between two different stocks was. And the reason this is superior to other metrics is when you look at, overall volume, sell orders don't really contain as much information as buy orders do. And in the case of the PC demand ratio, out of the money orders are the most informative because out of the money buying usually comes from investors willing to take a leverage position. So you don't, when you include all the maturities, you actually lose a bit of all the maturities and all the strikes. You actually lose a bit of information. So the most we'll say indicative form of informed trading is in the OTM space.
So you're filtering out the at-the-money trades first, which could be a lot of noise on those strikes, a lot of back and forth going on. You're also focusing primarily on the out-of-the-money strikes, which we all know that's where a lot of the retail flow likes to live these days. And also doing something that, quite frankly, is very basic. I'm surprised other people haven't tilted at this windmill before, which is trying to use the execution where the order goes up on the bid and the offer to try to filter out selling activity. Like, for example, a ton of call overwriting isn't really that informative for someone who's looking for bullish signals in a particular name and looking at the call volume as a whole and saying, oh, there's a lot of call volume here. That must equate to bullish interest when at the end of the day, they were overwriting all of those calls. So you're filtering those out, and that sounds like it's become a little bit more effective as a result there, Garrett?
Yeah, absolutely. Our research is showing that. And to be honest, I was surprised we got the results we did because it's a rather simple metric. But if you look at stock returns that have high call buying, the next week they outperform stocks that have high put buying. And it seems relatively simple, and maybe that should have been arbitraged out somewhere, but it still exists. We still run our data on a weekly basis, and we have these results.
Yeah, you're right. This is something that you think there's so many different ways people parse data these days. You think someone would have taken these steps, yet it seems like you guys are the first ones to do this, Garrett. So I tip my hat to you because, again, this is something that I may actually look at this one as opposed to in the past other put-call ratios. I've never really been that interested for all the reasons we've broken down here. So I'll have to check this one out for myself here, Garrett, and see if it's more effective here in our trading because it sounds like it should be a little bit more useful.
Oh, thanks, Mark.
There you go. You have our tip of the cap here on the network. So, I like the way you're looking at this. You've been running data on this, back to about 2015? Is that the case?
Yeah, so our signed volume product starts in the beginning of 2016. So we've calculated all of this historically for our U.S. options. And, there's a lot of extensions on this that we're currently looking into. In particular, the big news for individual stocks is their earnings date. And you'd especially find informed behavior in the call buying or put buying around their earnings, because that's when you get large price movements in response. So there's a lot of work still to be done, but we're excited about it.
And like you mentioned at the top, this is primarily for institutions, but is there a flavor or a version for retail, or perhaps are you licensing this maybe to some brokerage firms that some of our active retail customers are actually using so they can get access to this information as well?
The retail space is actually something we're looking to expand into for 2021. And we're in the very early stages, but we are seeing a lot of interest in some of these, statistics and ratios that the professionals are using, and I think retail could be very well suited for. So it's something that's, I would say, in the works.
I know you've also been focusing on looking at smaller lot trading as well and trying to use that to try to parse and analyze the retail flow a little bit more accurately. Are you finding a little bit more data, a little bit more signal within the noise by trying to filter out and look at some of these smaller lot trades as well here, Garrett?
So what we found with the smaller lot trades is that these are mainly focused in smaller illiquid stocks, and you have some in the big names, but and it was especially visible during the whole GameStop fiasco. But what we're finding there is, and I think what our institutions are looking for is the potential for a short squeeze or a gamma squeeze, where there was very little small lots being traded, and then all of a sudden you get an uptick, and maybe that coincides with a little bit of social media noise. So you combine these different data sets and these different indicators to see, where is potentially the next squeeze going to come from, or where is this renewed interest in retail? Because the retail space, which was once not taken very seriously, has shown to be in 2021 a force to be reckoned with.
We picked an interesting time to be the head of research over there at OptionMetrics, because as I mentioned, this past year and a half have really shown us a lot of unprecedented and surprising things. I've named off a number of things already that have surprised me over the course of the past year and a half. I could probably keep going for another hour and listing all the things that really surprised me over the course of the past year and change. But I'm curious for you, Garrett, as you've been out there looking at this flow, looking at this volatility, trying to come up with products that are suitable for this environment. What are some of the things that really stuck out to you and really surprised you and made you scratch your chin and say, they didn't teach about that back in the hallowed halls of academia?
I would definitely say it's just the incredible bull market run we've seen in tech stocks from beginning last March, and it's very interesting to see how the stock performance has completely just unchained from fundamentals. And you're always taught that it's stocks take the elevator down and the stairs up, and that it was like an elevator down and an elevator up this past year. So I'd say that surprised me the most, and I think it caught a lot of major players off guard as well.
That certainly is the case. It got a lot of people off guard. During all the height of this madness, we also saw some people, and it seemed like those calls were renewed at the beginning of this year, when we saw the rise of the meme stock madness out there, Garrett. People were saying that maybe structurally, as an industry and as a marketplace, the options market is underpricing these out-of-the-money calls, and particularly of this massive wave of buying we've seen out there across all of these smaller retail accounts who seem to be there's no price that they won't pay for some of these out-of-the-money calls. It seemed like an interesting, some might say an outlandish proposition at the time, but I'm curious for you, Garrett. You've been crunching these numbers for a while out here. What are your thoughts on that claim that maybe as an industry, as a marketplace, the options market maybe needs to take a second look at how they price some of these out-of-the-money calls, particularly in some of these, shall we say, meme-friendly names, Garrett?
Definitely. And I think it definitely, like you mentioned, it was a wake-up call, because there's no real, at least to my knowledge, some modeling going on about how this direct retail behavior investment or their mindset works. And in terms of, you see these outlandish volatilities for GameStop and the pricing of these options. And I think for the industry as a whole, it made us ask some questions about how do we treat these options in individual stocks. In my and I'm an academic from the beginning, so in my heart it tells me it's a temporary the performance of out of the money calls and how they've generated such massive returns over the last year is a temporary deviation from what we know about call buying in single name stocks, which is it really shouldn't be that profitable. So there might be a structural change in terms of how the options are priced going forward, but I don't foresee over the next 5 years buying out of the money calls in big tech names like Tesla or Apple is going to remain profitable.
I like that. It really shouldn't be that profitable. That's a succinct way to put it. Well, Garrett, unfortunately, that music means we're coming to the end of our time here on Options Insider Radio. But before we go, we like to leave our audience wanting more. So if there's a topic you forgot to mention here on the show today, Garrett, or perhaps something interesting, something fun you have lurking up your sleeves that you feel may intrigue our audience, now is the time, sir. The floor is yours.
All right. Thank you, Mark. It was a pleasure being on the show. Something that really excites me is OptionMetrics has started looking at the gamma flows. And this has become popular over the last few months. But what we've done is we've started calculating the total gamma volume of underlying securities in the U.S. And this is really valuable as a short-term indicator because it indicates whether the underlying stock is going to experience volatility as a result of hedging in these single name securities. And this was very prominent during the March of 2020. So we're really excited about that, and hopefully we can roll it out for the retail space sometime in the next year.
I like it. And if our listeners want to learn more, maybe kick the tires for themselves on what you guys have to offer, in particular, your new, shall we call it, enhanced put-call ratio there, Garrett, where should they go? What should they do?
You can go to OptionMetrics.com. We have a research blog, and we also have a set of research papers that might interest some of the listeners out there. And just keep their ears open because hopefully we'll roll some of this out soon.
There we go. That was OptionMetrics, METRICS.com to kick the tires and light the fires. And of course, stay tuned throughout the rest of the week. A lot more content coming at you. A lot more than just interviews here on the network. Coming up tomorrow, of course, your double dose of Education Wednesday, Options Bootcamp, Options Playbook Radio. Thursday, we're back. Another double dose. Episode 2 of the bi-weekly Options Extravaganza known as the Option Block, as well as TWIFO This Week in Futures Options. Friday, Volatility Views. Then it all kicks off again on Monday, Option Block Episode 1. And the Crypto Rundown, a very popular one these days. All the way through to another Interview Tuesday and another episode of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.